yes, it's Salah Nasri here, and yes, I have a special announcement. The Game of Chip has just hit 20,000 orders on Amazon. Thank you to everyone who placed the order. The book was just released in December, so I'm very, very grateful and surprised to date. If you are someone who is intrigued, curious about how the semiconductor ecosystem works from beginning to where we are right now, this book was written with you in mind. So order it, read it, and it is pretty much a handbook of the whole ecosystem. In the meantime, enjoy the next episode and don't forget to hit that subscribe button. And now, people are scratching their heads about this AI data center bubble. Is it a bubble?
I think financially, possibly. Valuations are at unprecedented levels.
Who do you think is most at risk of being disrupted within the semiconductor supply chain?
Anybody who feels that you have to weather the AI cloud and then we'll be, back to the old way of doing things is fundamentally at risk.
Our guest today is Abhijit Mahindroo. He is a senior partner at McKinsey Company, co-leading the Americas Semiconductor Practice.
Electrical engineer, Indian Institute of Technology, Delhi and Stanford. 20 years in the firm, 75 plus client engagements. He sits with the CEOs behind the largest build-out this industry has ever financed.
Let's dive into the clock nobody in this industry controls.
The industry has created more economic profit than it did in the entire previous decade from 2010 to 2019. But 30% of the economic profit was concentrated in one company. No prizes for guessing which one. The rest of the industry was in a prolonged downturn for 4 to 5 years, almost lasting as long as the 2000-2001 downturn did.
Who is most likely to capture the value that gets created?
I think people who move fast and people who are focused. Today, NVIDIA has decided that chips will have a 1-year cadence and the train can't wait for you.
If you could point to one transformative shift coming into the semiconductor industry over the next decade.
In the next 5 to 7 years, the AI industry is going to invest somewhere between 5 to 7 trillion with a T dollars in capex. That amount is probably twice the combined amount that was spent in today's money on the Manhattan Project, the Marshall's Plan, all the internet infrastructure that was built, the Belt and Road Initiative, and this build-out outstrips that by a factor of 2. We've had maybe 2 or 3 years of that. There's perhaps another 10 years to go. And so what does that mean?
Hello and welcome back to the Semiconductor Leadership Podcast. I'm your host, Salah Nasri, and whether you are a semiconductor veteran or someone very curious about semiconductor manufacturing, this is your podcast. Today is with great pleasure that I have Abhijit Mahindroo, Senior Partner and Co-Leader, Americas Semiconductor Practice at McKinsey Company, aka McKinsey. So Abhijit is co-leading the semiconductor practice here with experience across Delhi, Silicon Valley, and Southern California. He is advising semiconductor, industrial, and automotive clients on strategy and operations with a track record of delivering 15 to 30% improvement in R&D effectiveness and 20 to 30% gains in manufacturing output, throughput, and cost. So without further ado, Abhijit, welcome to the show.
Thanks, Salah. It's wonderful to be here.
Great to be here, Abhijit. Thank you for joining us. Abhijit, look, I want to start off with a rapid round session for the audience to actually get to know you, who you are, what are you about, and etc. So you ready to rumble with some short answers?
Rock and roll.
Let's go. Abhijit, strategy or operations, which engagement teaches you more about a semiconductor company?
Without a doubt, operations. And I'm going to quote a Prussian general who said, no battle plan survives contact with the enemy. I think it was von Moltke.
Yes.
Strategy tells you what you want to do. Operations shows you whether you can actually do it. And with the compounding that happens in this industry, it's the best way to find out who's got the long-term chops.
There you go. Look at that. Beautifully done. IIT Delhi or Stanford, which shaped you more as a thinker?
IIT Delhi. I think your first college experience sets the template, and then you refine from there.
Nice. One book every semiconductor executive should read that has nothing to do with semiconductors.
I'll give you 2. I'll give you I, Robot by Asimov. It came out in the 50s. It was a series of short stories on what robotics is going to do to the world.
And it
And I think particularly had good thinking on the ethical implications of robotics. And the second one is actually a book recently came out. It's written by several of my colleagues. It's called A Century of Plenty. And what it says essentially is that if we continue innovating at the rate that we are, and we make the right policy decisions, by 2100, you could look at a future where everybody in the world has the standard of living that an average Swiss citizen has today. That's 82,000 in, per capita GDP with attendant health, education, and security benefits. And I think what's exciting about it is that our industry has a major part in enabling that kind of a future.
Sure. Well said. The one semiconductor trend from your research you wish more executives were taking more seriously right now?
Look, it's fundamentally a new era at this point. There's changes in where growth is going to come from. There's changes in the geopolitics surrounding our industry. There's a reshaping of supply chains as we've known it. And there's changes in how work actually gets done with AI sort of coming into every aspect of our work. Each of these changes could have been transformational. Together, they become epochal. So navigating this, understanding this, figuring out what it means for your institution is probably the biggest challenge of our times.
We're going to go a bit deeper in that in the next question. During the podcast. Abhijit, the app on your phone you couldn't live without?
It's actually YouTube. No, it's not the Reels. Otherwise, there's almost nothing that you can't learn about with the kind of videos that are there. I'll give a couple of examples, right? You're interested in the history of the semiconductor industry, go see the Asianometry videos. You're interested in military history, as I am, go see a series of videos by Mark Felton, who's a British historian, talks about, very arcane facts about World War II. You can find gold on YouTube.
Do you want a fun fact? Asianometry founder was on this podcast. John Lai. Yeah, he had the mask on as well, so you couldn't see him. Yeah.
Hello to him. He does that in both.
That was a great one. If you haven't seen that one, check out the videos. Delhi, Silicon Valley, or Southern California, which office gives you the sharpest view of the industry?
It's got to be Silicon Valley. It's a magical place. There's no place other like it.
100%. In one word, how would a CEO you've worked with describe your style as an advisor?
Provocative.
Biggest myth about what semiconductor M&A actually delivers for companies involved?
I think the biggest myth is that M&A is a short way to value creation. What research tells you is, 1 in 3 M&A actually succeed over the long term from a sustainable value creation point of view.
Nice. If you weren't in consulting, what would you be doing?
I'd probably be a fighter pilot or maybe a military historian.
Wow, interesting. What's one thing advising semiconductor CEOs for decades has taught you that most of them still get wrong?
Look, I wouldn't say get it wrong, but I'd say they take their time internalizing it. And it's all about the people. I think the single biggest thing a CEO needs to do is get the right capable leadership team and align them. I think the biggest regret we hear from CEOs is that they did not move fast enough on their people choices. And I think especially now when we're going through another churn in the industry in leadership positions and new generation takes over, it's one lesson to remember.
Agreed. Abhijit, thank you for passing the round rapid fire round with us. Abhijit, look, it's great to have you here. You've had a fascinating career, right? From electrical engineering once upon a time at IIT Delhi, and then to Stanford, and then to co-leading McKinsey's Americas Semiconductor Practice, where you were advising CEOs, COOs, CFOs of the most important companies in the world today. You're guiding them on strategy, operations, M&A, and growth through some of the most disruptive cycles we've ever seen today in semiconductor manufacturing. Can you give us a short 60 seconds version of how you got here?
All right. I'm an electrical engineer by training, and I landed up here at Stanford to do electrical engineering. And I wish, Salah, I could have told you that, I foresaw how 20 years later the semiconductor industry would be what it is. I didn't. I completed my graduation. I joined McKinsey. I actually went back to India, spent 3 years there, but I'd met my now wife here at Stanford, and, we wanted to get together, so I came back. And what started off as a 6-week project in semiconductors became a 9-month engagement. And it was around the time that nobody wanted to do semiconductors. It was a quote-unquote dying industry.
Yes.
Everybody wanted the internet, software, e-commerce, those were ruling the roost. And so they found this one person who was an electrical engineer and was doing semiconductors. And so, just a series of work across different parts of the value chain, different regions, 20 years, maybe 75 plus client engagements. Here I am.
Wow. And, what's really interesting is, you've been based all over the world. What does operating across the 3 geographies teach you about where the semiconductor industry center of gravity actually is, and how is it shifting from your side of you?
Look, the beauty about the industry is that it has no one center of gravity. If you're saying what's the center of gravity of lithography, well, that's Netherlands.
Yes.
If you're saying what's the center of gravity of specialty materials, maybe Japan. If you're saying EDA, it's the US. If you're saying, rare earth materials, it's China. I think the plus point about the industry, which hasn't fundamentally changed, is it's so global, so interdependent, and such a force for collaboration and development. And I think that's one of the redeeming features of the industry. I think the other point is that if you look at almost any modern economy that's sort of gone through its post-World War II growth, Japan, Germany, South Korea, Israel, Taiwan, no country has done it without semiconductors. And for the next round of countries that intend to raise a large population of their people above in terms of income and wealth and prosperity, this industry becomes something very central.
What happens for those that neglect it or don't consider it and depend on the others to do it for them? What do you think? What's your gut instincts?
Look, I think they have to find ways to get involved. I think the good part about the industry is that it is expanding into new geographies and territories that it didn't before. India, the Middle East, Eastern Europe, places that have so far been relatively neglected from a semiconductor industry standpoint are paying attention, are trying to get a piece of it.
Right.
And I think over time we're going to actually see this network of contributing economies actually add rather than get over concentrate.
Your work, of course, is evidently used with amongst all the key players in the semiconductor. Any leaders worked with you or with the McKinsey team? Are you, is it okay? Can you share that even governments, are they reaching out to you for guidance on this?
We absolutely work with governments. I'm not going to take names, and actually we're careful about client confidence. But at this point, there are so many governments who are interested in understanding how other countries have managed to promote and attract semiconductor investments, how they should prepare their infrastructure for the industry, how they should prepare their labor force for the industry. Absolutely.
The reason why I ask is because we have ministers watching this podcast, if you didn't know. Caught my surprise last week when I was in Singapore. You've worked, of course, again, just to emphasize, with equipment companies, fabless, IDMs, even system companies. Which segment of the semiconductor value chain do you find most strategically interesting right now, Abhijit, and why?
Look, I think in some ways the architecture of the industry itself is changing. I remember seeing a genealogy chart of the industry where you had Fairchild and Intel and so many little pieces and industries came out of that. And the industry specialized and super specialized into some of the things that you're talking about. This wasn't always the case. If you look at Motorola, if you look at Siemens, if you look at Philips, they did multiple aspects of test, packaging, chip manufacture, etc. I think a couple of interesting things are happening. One, I think there is the pendulum is swinging back. There's been a fair amount of M&A in the industry. And I think if you drew that genealogy chart today, you'd have a phase of compression. I think you're also seeing a great deal of vertical integration in the industry with hyperscalers reaching out and doing chip design and, Elon talking about chip manufacturing, etc. So I think these segments may be a slightly outmoded way of thinking about them. I will say that the equipment space continues to catch my fancy. It's right at the intersection of fundamental physics and material science and automation, electrical engineering. Just seems like a very cool thing to do. And what they're able to do and the scales at which they're able to do it is amazing. So personally, I find that very attractive. But I think the industry as we know it is really undergoing a major shift.
Yeah. As you know, you were there last week at the ISIG USA Executive Summit. And what really stood out for me is when we surveyed the audience in terms of what's their biggest issue that they see as a significant challenge, for the first time ever, the biggest word that was used was capacity. And this is actually quite orientated to the equipment folks, is that, once upon a time, they used to struggle to sell their tools. And now you have someone like Terafab, as you mentioned, who are asking these equipment manufacturers, give me the most expensive and the best tool that you have. And, there's all fulfilling. What does that tell you about that? Like the shift? Because once upon a time, these equipment manufacturers were struggling to get their tools out of the block. Now they've got like backlogs they've never seen before. What do you see?
Look, I think you got to hand it to them. They're artisans. They do black magic. The stuff they are able to do at the atomic and the photonic scale, you really think it was sorcery. But I think if you dig deeper into their supply chains, you'd be amazed at the very, very complicated supply chains that they have.
Right.
At the small, sometimes unknown names that hide behind, the equipments that you end up seeing. In many ways, they're sort of assemblers of very, very highly sophisticated things. And I think managing those complicated supply chains with several large and small companies with very, very deep expertise in specific areas is a gargantuan challenge. And getting all of them to move at the speed that you now need them to, given the kind of demands they are seeing, requires a degree of sophistication, technology scaling, capital injection, supply chain management, regional dynamics in light of geopolitical and supply chain aspects that we don't have the capability for. That capability is being built, and I think it'll take some time for that to catch up.
Yeah, for sure. You've supported integration programs for industry-defining mergers across the semiconductor value chain. From your perspective, from all you've seen, Abhijit, what does good M&A integration actually look like in semiconductors?
Look, I think there's probably three aspects you need to get right. The first is the day one stuff. Don't break anything. Make sure that you're still meeting regulatory requirements. You can put out releases on time. Your key personnel have not left and gone away. I think the second thing is really extending the envelope on synergies and getting what the deal promises. Not necessarily the first number that was put out, because many times the number you put out is the one you need to justify the deal. But in terms of taking a full-blown view at synergies, include the cost aspects, but also the revenue aspects. In fact, managing the risks that come with the potential revenue leakage. I think being very disciplined about value creation in such a way that you end up retaining the key talent that's actually going to execute that. Because the minute engineers are fickle people. The minute they believe that what is coming together is not going to live up to its promise, they will leave. And managing that aspect is the second piece. I think the third one is not losing sight of the transformational elements and processes of these deals. Many of these deals, particularly vertical integration, bring together capabilities that existed in silos, and together they give you the capacity to do something bold, something new. Making sure that promise doesn't get exhausted in the day-to-day of running the race and staying ahead on your deliveries. I think that's the third aspect. So, a successful merger in our mind would accomplish all three of these aspects.
From your experience dealing with this, I think we would all be intrigued to know is that what are the most common mistakes companies make in the first 100 days? I mean, you mentioned don't lose your team. That's the number one. Regulatory matters. What are the other most common mistakes that you're seeing?
Look, I think the biggest mistake they make in the first 100 days is trying to do too much.
Okay.
Because I think if you want to make sure that at the end of 100 days, these companies are running fine, suppliers are not spooked, customers know that you will continue to honor commitments. You're not going to make any major changes that will start disrupting anybody's roadmap or anybody's schedules. I think these are the most important things to establish. Getting the organization to understand and believe that these cultures can come together and produce something that they can get inspired by is the other aspect of this. So I think making sure that you pick a few elements but you do them rigorously, you do them with the right folks involved, and you do them in a way where you are making the most critical decisions, but also very clearly delaying decisions that don't need to be made or avoiding discussions that don't need to happen. I think getting finesse on that is probably something that takes a little bit of science.
Sure. These are remarkable numbers, right? You've driven 20 to 30% improvement in throughput, cost, and cycle time across manufacturing and assembly plants. What does an operation transformation program actually look like in a semiconductor fab, for example?
Look, I think it starts with setting the aspiration. Most improvement programs start with a very incremental mindset. They start with, this is our productivity. What will it take to unlock 3% or 5%, to meet the next set of commitments or the next budget objective? You've got to start with what we call a clean sheet narrative. You've got to start with what we call full potential.
Right.
Just like you look at tools and you say, all right, the tool could run 24 hours a day, 7 days a week, 365 days at this maximum speed. And so you start your OEE pretty much from the maximum possible theoretical value, and then go down and see current performance and try and understand all the constraints that are actually preventing it. You've got to do that with all your assets. You've got to do that with your material consumption. You've got to do it with your critical labor that's actually being deployed, which in many times is almost as effective and important as your most important tools. We measure sort of effectiveness and productivity and efficiency on those aspects. We don't do it across the board. So I think extending this aspect of really measuring performance, defining performance, measuring performance, taking a full potential view, trying to understand what is blocking you from achieving it, and then reimagining processes, information systems to systematically remove those constraints. That's what gets you those outsized improvements.
You've led, of course, as well, the R&D optimization programs that have kind of also improved the effectiveness by 15 to 30%, Abhijit. What does R&D productivity actually mean in a semiconductor context?
Look, it starts with measuring it, absolutely. And there are ways and means of doing it. We've acquired, for example, an assets that I led the acquisition of called Numetrics. It helps you measure R&D productivity in embedded software or chip development, right? So it quantifies it. But I think stepping back a little, Salah, the question is very much around, how do you improve performance in sports or any other creative or human endeavor? It's the right mix of art and science. It's the right mix of talent, but also discipline and process. And I think where R&D is concerned, there are a few elements, right? I think one element is around your product architecture. You might have heard of Conway's law that talks about how your product architectures essentially mirror the architectures of your organization. Silos kind of tend to reflect themselves in products itself. So I think being very clear on your product definition that basically, to use Jensen's words, allows you to do as much as you can and as little as needed, and not falling prey to the not invented here syndrome, to waste time on things that you can get from other places or reuse, etc. So I think that's one aspect of it. I think the other aspect of it is really pruning your R&D project list. Old projects don't die.
No.
They hide in interesting corners. But I think creating the visibility around time and effort being spent in these places, really following a systematic stage gate process, pruning the tree where needed and adding others where they need to be added, being very clear about how much effort certain things will take, because the classic trap is to overestimate the benefit and underestimate the resource, and then that leads to persistent and delays of that sort. I think the third element is just managing it effectively, your ratio of, managers to actual doers, getting that right, creating the right visibility, creating the right tools. And now I think AI opens up just another frontier in terms of productivity benefits and the effectiveness it can add. So I think bringing all of this together can lead to those kind of improvements.
So, you mentioned certain elements in terms of how you actually measure it, But what I would like to ask a little bit deeper is how do you measure it without killing the kind of exploratory work that produces the next generation of products, even though the old stuff still works, right?
No, absolutely. And look, with semiconductor technologies, there are so many stories of that skunk work project that was done at particular time, coming in useful to unlock a whole new aspect.
Yeah.
I think 2 or 3 principles help, right? I do think there has to be a portion of the R&D budget, call it 5%, call it 10%, that needs to be set apart for really building that bank for the future.
Right.
Things that may not pay money today, but are critically important in enabling new capabilities or testing the frontiers. I think the second aspect, and particularly now, is not falling prey to identity crisis and saying, we are a company for a particular kind of end market, and that's all we do. At the end of the day, we're custodians of technical expertise in certain dimensions. That expertise must be deployed in the most cutting edge applications. That's what pushes the frontier. That's what adds to new capabilities that will go into products. So really rigorously challenging yourself that every incremental R&D dollar that you're spending, is that going towards building your capability base? Or is that going towards, development work for packaging the next product, putting together? And look, both are needed, but I think being sensible and clear in classifying it, monitoring that over time, making sure that you're not too dependent on one stream versus the other, that's the balance you need to get right.
Yeah. I mean, well, one of the interesting things, Abhijit, is like now we're seeing it, but, pre-COVID, I mean, our focus was advanced packaging when it wasn't that attractive. And the people that were already in place in advanced packaging are, they enjoy it. They're living their dream right now, right?
They are, Salah, but also I think with many of these things, there are multiple bounces of the ball. And I think the first bounce of the ball goes to those who have things off the shelf, right? If you look at, for example, the data center build-out, the kind of things that people are talking about is, do we have enough transformers? And the people who have capacity to provide those transformers are in a wonderful place. And they will be for some time. But if this continues, then the second order effect is, well, we can't afford to wait so long. So do we need solid state transformers? Do we need a different way of looking at things? And that's where the innovation cycle kicks in. And the ability to sort of redeploy resources towards the places where cutting edge work is being done. So even if you didn't have, the research lying around, I think you absolutely need to catch the second or the third bounce of the ball, and the ability to shift investments into areas that are now going to really drive the cutting edge. That's what separates the winners from the losers.
Yeah. Well, there's another one now, of course, like all of a sudden, 2 years ago, I remember even our summits driven by the advanced packaging folks, we were already talking about silicon photonics and co-package optics. And now 2 years after, even myself, I'm kicking myself in the head for not investing in photonic stocks. But I'm sure, do you when let's say 2 years ago, was that in the radar of McKinsey, or do you keep that in the radar and leave it aside and let your customers know? Or do you have secret things that you guys keep in mind for really?
We're not investment advisors.
Oh, there you go. Okay, so you do it yourself.
I'm doing it myself. Look, I think our job is to help our clients make very meaningful performance improvements over a period of time.
Sure.
The principles we apply.
Sure.
We are not the best guys for picking stocks.
No, I'm not necessarily picking out on stocks. I mean, this is on a personal level, but it's more so I'm more referring to, Abhijit, is that there are people who would rather let others go first. So you got folks that are already ahead of the game with co-package optics, and now you've got people playing catch up. And the ones that have gone ahead with the game are in an incredible situation right now, to a point where they can't fulfill the demand that they have.
Maybe.
So what I was trying to get to is that not necessarily you guiding people on what stocks you need to buy, but more so like McKinsey. Does McKinsey have this kind of some sort of flag that pops up where you guide your customers and say to them, hey, you want to keep your eyes on this, or you want to keep...
Oh, absolutely. I mean, we're looking at pathfinding technologies. We do a ton of research out of our, our global institute, for example, published a report recently on, I believe, the 20 top technologies that are going to shape value creation over the next 15, 20 years. We have assets that'll help you identify at this point, what are some of the companies driving research in these areas. And particularly now with startups getting the kind of funding that they raise, these are fairly material amounts and companies that can move markets, right? So I think absolutely these are places that we track. These are places that we review. But I think getting the right balance between, how much you invest in these efforts versus how much you invest in what you have today, those are company by company decisions, obviously.
Interesting. So, Abhijit, your April 2025 piece on AI's impact on the semiconductor industry is your most recent major publication. Could you share with us and to the audience who haven't had the opportunity to be able to read it, what's your central argument and what are the implications that most people in the industry are still underweighing?
Look, the central theme around that particular piece was how, semiconductor industry was becoming effectively a tale of two industries, so to speak. And what I mean by that, and this is circa March, April 25. So, in that time frame was there's a set of players that were very clearly breaking away on capturing and generating tremendous value thanks to the AI trend. In the first 5 years of this decade, the industry has created more economic profit than it did in the entire previous decade from 2010 to 2019. And of course, AI has been a major driver of that. But 30% of the economic profit was concentrated in one company. No prizes for guessing which one. And then if you add to that, all the other folks who have products and technologies that were catered towards AI, you'd find that a lot of the value creation was concentrated amongst those players. If you looked at the rest of the industry, several folks had not yet recovered from the peaks that they had hit during, say, the 22-23 COVID timeframe. So in effect, the rest of the industry was in a prolonged downturn. Over 4 to 5 years, almost lasting as long as the 2000-2001 downturn did. And I think the research was actually calling aside that aspect. It also said, look, if you're sort of in the first group, congratulations, but you're in a race that you have to keep running fast because today NVIDIA has decided that chips will have a 1-year cadence. And actually systems will have a 1-year cadence, and everything that needs to go along with it needs to move at that speed, and the train can't wait for you. So learn to move fast, learn to focus, learn to bring along your supply chain partners, scale up, because this is now going to be a fast cadence. For the rest of the industry, it was a wake-up call that AI is not a flash in the pan. This is not going to go away, and the world will not go back to what it used to be. Start thinking about how your capabilities and your technologies can start getting deployed to enable the second bounce of the ball. If you're a memory company, how those aspects might be required, or chips may be required in certain places. The memory industry was going through a very, very significant downturn at that particular point of time. Look at them today. And similarly, other players in power management or optical communications, etc., constraints would keep shifting. I think what we were exhorting the industry to do was to identify how their capabilities can get deployed against the constraints that are likely to appear, so that they can also benefit from this multi-year growth phenomena.
Nice. Interesting enough, you've also written about silicon carbide, wide bandgap technologies, photonics, digital fabs, in the last few years. When you look across these themes, as you've kind of like hinted on in terms of power management, which I assume you're referring to the wide bandgap community, what is the connecting thread, Abhijit? Is there a single structural shift in the semiconductor industry that explains all of them, you think?
Look, you're asking for the unified theory of everything.
Sure. All right, if I was a customer, I want my money's worth. I want to know all of it.
And what consultant would I be if I didn't have an answer? So let me give you two. I think in the short term, the AI infrastructure is something that is bringing all of these things together. It's bringing together a computer as it always did in different forms. It's bringing together advanced packaging that is now essential for these accelerators to come together. It's bringing together aspects around energy both upstream, the sort of power management that's required for these new 800-volt architectures, and frankly the cooling aspects that go along with it. So the thermal management aspects that are required for these, and of course compound plays a major part in several of these aspects. It's bringing together communication through co-packaged optics and a bunch of other technologies, including legacy copper. All of these things are coming together in a way where the slowest development pathway of this holds the train. Because all of these are required if you're going to follow a annual release cadence. And I think this is leading to a very focused, think of it as a wavefront that needs to kind of expand together. It's very quickly identifying bottlenecks. It's leading to investments and capital towards perceived bottlenecks or perceived areas of opportunity. And it's being done very interestingly through a mechanism where, there's not fundamentally government subsidies or anything like that. It's a bunch of investors and profitable companies that are making very reasoned and rational choices. So that's one aspect that kind of brings them together. I think at a more fundamental level, and this is perhaps more relevant to the edge, we are seeing what I would call the EE architecture of everything, or the electrical electronic architecture.
Yes.
If you think about what the iPhone did, you remember the old phones, the Nokia phones, the Motorola phones that used to exist. It vertically integrated an industry in a very software-first architecture mechanism with system integrator. Essentially started playing a very important part in defining the silicon and participating in its development, and specifying what was needed, and being able to guide vast sums of investment towards the right places. What happened first in phones then sort of migrated to cars, and you started seeing that happen in the automotive world, of course, over a longer kind of time frame. And now you see similar architectures and structures proceeding towards other places: drones, automation and robotics, and humanoids, a bunch of defense equipment. And so these sort of integrated architectures are bringing together aspects of compute, communication, power management, software definition. These are proliferating. So I've given you a couple of examples, one on the core or the infrastructure side, and several of these on the edge. And I think what this will lead to is a very new way for these technologies to interact, and importance for certain players to look across these technologies and develop expertise or the ability to access them, across sort of narrow siloed domains. So it means new kinds of players. It means M&A. It means partnerships. It means new ways of working. And I think we're going to see the effects of those roll out over many years.
So there's kind of a theme here. I mean, you've been writing since 2011, correct me if I'm wrong. You ever sit back and say to yourself, what's changed most about the questions the industry is asking itself? And you mentioned, from your side is like the key is, of course, staying surprisingly constant across the cycles that you've seen and observed.
Look, I think, decades are kind of good time periods to think of, all right?
Yeah.
And so if you think of the first decade of the century, 2000, 2009, our analysis showed that during that entire time frame, the entire semiconductor industry, everything from equipment down to, backing packaging, they generated maybe $50 billion of economic profit, right? The spread between ROIC and WACC.
Yes.
And if you took Intel out of that equation, the industry actually destroyed value. You had two downturns, and so effectively the industry was subsidizing itself, and it was rumored and seen to be very highly cyclical. That's the semiconductor industry that people remember when they said, I don't want to do this, I'd rather do software, or I'd rather do e-commerce and things like that. Cut to the second decade, 2011 to 2019, the value creation or the economic profit in the industry grew 10 times. What happened? One, you had the iPhone. Yeah. And a absolutely new growth engine that, as I said, put together this year-on-year improvement cadence on value creation, lifting a lot of technologies and sucking them into this device. There was also a lot of M&A, so industry structure started improving. you had to move much faster, and you had the foundry fabless model really, come about, and so those were sort of the trends that drove the second decade, and then you have the third one, and like I said, in the first 4 or 5 years, we've created already more economic profit than we did in the previous 10, and I think we've taken this aspect of product integration and year-on-year cadence and improvement one notch higher into accelerated computing, into edge devices. And it's creating vistas of value creation far beyond just developments in chips, right? And Moore's Law is just one of the many ways to sort of create value. You guys, with all the work that you're doing in advanced packaging and convening the industry around, the optics and the co-packaged optics side of it, and new implementations like quantum, etc. You're seeing what kind of an ecosystem this is creating. So for the industry, I think it's been a very steady and continuous growth and improvement cadence that we're on.
Yeah. I think also the other one could be a third one, Abhijit. You can correct me. You're the master here, so I'm just learning from you, Abhijit. But in the second part, 2011 to 2009, China.
Yes. At least in the first half of that decade.
It was a big one.
It was a big one. And, it reached a point where I think close to 35% of industry revenues were essentially coming out of China. Any company that wasn't selling into that place wasn't growing nearly as much. Of course, that trend did start circling back towards the second half of the decade. I think more so, particularly towards this decade. But absolutely.
That was a key one.
That was a key one.
Am I okay to ask you whether right now that once upon a time we had the dot-com bubble, and now people are scratching their heads about this AI data center bubble? Is it a bubble?
Look, I think financially, possibly. Valuations are at unprecedented levels, and these kind of valuations have bumps and corrections. But I think the question that you have to ask yourself are these technologies leading to sustainable improvements of some kinds, right? So let's look at some examples. If you look at these large language models, 2 years back or 3 years back, you were hearing things like they can pass LSATs, or they are giving grade 10 or grade 12 SAT scores and getting good ones. Like, all right, that's fine. They're writing software to a reasonable degree of accuracy, and you were like, I've got doctors in my family, I've got lawyers in my family, I've got software engineers in my family, and I was sitting there saying, okay, that's fine, that's believable. But a year back or 2 years back, now they're passing IIT exams. They're doing well, better than PhD students in many respects, or Olympiad exams. And any nerd or geek stands up and takes notice. These things are getting smart. These things are getting intelligent. So some capability is fundamentally getting built here. If you think about, if you just go back to the dot-com times, remember pets.com?
Yes, I do. Yeah,
that became the archetypical case of this thing that went nowhere. I believe there's another company now that's basically just taking the same business model and brought it up, and it's working today. And so maybe what I'm trying to say is, look, several of the ideas that did not work at that time may have had nothing to do with the underlying enabling technology, may have had everything to do with the fact that the infrastructure required or the social behaviors that are likely to drive its acceptance in terms of internet proliferation or people being comfortable with devices and things like that weren't there at that time. And so, yes, there could be a reset in terms of valuation today. But I don't think that means that the technology that is being developed or the ideas that are coming to the fore are fundamentally bad ideas that will not catch traction at the appropriate time. And so if you're an investment banker, I don't have a good answer for you. But if you're somebody who invests in building these capabilities for the longer run, I think we're in wonderful times.
Yeah, absolutely. I mean, it's a good analogy. I mean, I always love to compare history and how business plays previously in time. You had the once upon a time there was like MSN.com or Bing.com, did the same thing as Google, right? But it was just not the right time. The social behaviors weren't there. But now, I don't think people are using Google as much as they were before. ChatGPT, Perplexity is taking over.
Or Gemini.
Gemini is unbelievable now. And then you also have got the what's really frustrating for me is like, I've been playing around with the Anthropic Claude initiative, and like every day there's a new launch, new version, boop, just keeps coming up, and you just don't know where the future's going now, is it? It's just moving so fast. Which kind of leads me to the next part of our discussion, which is about growth and the forces reshaping the semiconductor industry, right? Agentic AI is playing a massive key role now. And then we're moving to the next step, which will be physical AI, right? With the humanoid elements being put into place. You convene McKinsey's T30 Summit for CEOs, COOs, and CFOs for technology, semiconductor industrial companies, which I hope one day I'll get an invite to, Abhijit. Just putting it out there. But what are the questions that keep coming up in those conversations right now? I mean, what are you hearing? If you could share?
Yeah. Look, I think the questions that keep coming up are fundamentally you've got to complement this industry for continuously looking ahead and trying to reinvent itself. And so the questions really are really around, where is the puck moving? Where are the next elements of growth going to come from? What do we need to get ready around them? Back in 2011, when we started the summit, a lot of the questions were around, look, we are these hardware players that are playing in the bottom layers, the party is happening up the stack. How do we get to be part of that value creation? There are questions around China, new market that's becoming available, participating, how in this very different way of working in that market. How do we access it? How do we participate in it? How do we create value around that? M&A was speeding up, and so people were asking, how do you create value with M&A? Beyond the strategy, how do you execute good deals? I think today that narrative is shaping to, how do I participate in AI? How persistent and real is AI? How do I make sure that I'm using AI to accelerate my own way of working and development? There are questions around what are the other growth vectors, this, spurt in defense spending. What will that mean for the industry? Automation and robotics, how soon, how real? Whether it's humanoids or other form factors of robots, what can we do to enable this, and how likely are they to pick up, and how soon? Those are some of the questions that we are looking at now.
And what does the room agree on that the public debate is still missing?
Look, I think I think the aspect the room agrees on, where I don't think we have enough of a public debate or appreciation, is the state of U.S. manufacturing today.
Okay.
Again, maybe a historical analogy, right? When the U.S. entered the Second World War, they did not have, at that point of time, very significant military forces. I think if you look at the numbers, it probably 15th, 17th, 18th largest army. The technology wasn't absolutely first class. The manufacturing levels were nowhere near what a militarized setup would require. But in the 4 out of the 6 years that the U.S. was part of the Allies, by the end of the war, the U.S. had produced maybe 1/3 of all aircraft that were produced during the entire time. A large number of armaments, ships, and tanks. It was basically the manufacturing capacity of the U.S. that turned the war for the Allies, right? The armament industry of the world. And it did not happen overnight. What's not well known, I'll give the example of Charlie Sorensen and Willow Rupp. Charlie Sorensen was a Ford engineer who was essentially requested by President Roosevelt to try and help, increase war production. Charlie went down to a factory, I believe, in San Diego. He inspected how B-24 bombers were made, and then he went to the famous Coronado Hotel and laid out in absolute detail on the ground how you could make these aircraft applying Ford's manufacturing principles in terms of how vehicles were assembled. So much so that when the Willow Run plant became operational in 1944 at its peak, it was producing a B-24 bomber every 63 minutes.
Wow.
German intelligence actually got footage of this, but the leaders there would not believe those levels of production were possible. And I think the point I'm trying to make is that capability or that ability to scale manufacturing is not something the US has today. We're seeing that in the semiconductor manufacturing also that is ramping up. It takes much longer. It's much costlier to do these things in the US. And I think trying to understand as, there's more reshoring, as more and more manufacturing capability comes here, what are some of the things that will help the US essentially rebuild some of that manufacturing muscle, obviously catered towards today's technologies, today's times. I think that's something that is not adequately discussed.
Thank you for sharing that. Abhijit, you've advised clients on growth strategy for businesses affected by technology-driven disruptions, right? In the current AI-driven cycle that we're in, with the impact, of course, of agentic AI being involved now, who do you think is most at risk of being disrupted within the semiconductor supply chain?
Look, I think anybody who feels that you have to weather the AI cloud and then we'll be, back to the old way of doing things is fundamentally at risk. And why I say that is, there's a very famous quote by Senna, the F1 driver. It's been said many times. You can't overtake 15 cars when it's sunny, but you can do it when it's raining. And the point that he makes is in times of turbulence, in times of change where multiple vectors are impacting you both externally and internally in enabling technologies and geopolitical context or supply chains, focus and speed are the two things that make all the difference. Being very clear on where the value lies, what you're trying to accomplish, and then being very fast in going and doing that to the exclusion of everything else. That precision on focus and speed, and I think whichever part of the supply chain or the semiconductor industry you look at, I think the winners will be those who embrace that mantra of operating, and I think the losers will be those who are unable to do that.
What's your thoughts on the Chinese speed, German efficiency? Chinese speed, German efficiency in terms of product. Have you heard that manufacturing product?
But I think you could probably add US innovation to that.
US innovation, that's a good one.
But before you know,
we have the trademark now. That's a good one.
Before you know it, you're describing the semiconductor industry.
Yeah, I like that. Means Chinese speed, German efficiency, US innovation,
Japanese discipline.
Wow. Like I said, every region has
something to contribute. That's the beauty of the industry.
That's it. I like that. I might have to write an article. Chinese speed, German efficiency, US innovation, Japanese discipline. Who is most likely to capture the value that gets created?
I think people who move fast and people who are focused.
But that's hard though now. I mean, you look at these current large companies now, there's a lot of bureaucracy involved. Like what does McKinsey guide these large companies on when it comes to bureaucracy and how you handle bureaucracy?
But look, I think if you look at many of these companies, they are trying very hard to move faster. If you look at, for example, the last 2 years, you'll find that the number of CEO changes that have happened in the industry are much higher than what they've been in the past. I think there's also been a shift towards, CEOs with more background in the business, perhaps more technology backgrounds and, better understanding of what these companies need and familiarity with the company. I think several of them have undertaken efforts that essentially minimize the number of layers, between them and the front line. I think you are beginning to see a lot of M&A, which is basically people making portfolio choices about what is core to them and what's not core to them. So a lot of the baggage that was picked up during the 2011 to 19 boom years is beginning to get rationalized. I think people are talking about how do I align my technologies to some of the growth vectors. Again, AI, data centers, defense, in general, automation, robotics, all these growth areas. I think some companies have natural advantages. They're already there, or they have products ready, technology is ready, they're geared for fast operation, and some will have to go through re-engineering, rewiring to sort of get ready for that.
Yeah. Well, what's your thoughts? I mean, recently, we've seen like insane M&A lately with regards to semiconductor IDMs per se, if you could say, or fabless companies buying these photonics companies. Recently we had the Dust Photonics acquisition, Terramount recently. You've had the Celestial AI. The accumulation is in the billions now. Well, what's the move? Why can't these guys just create their own photonics division and instead of just go, right, I'm just going to buy a company out and integrate it?
It's just incredibly difficult. If you look at, again, the genealogy charts of the semiconductor industries, they have vestiges of organizations many years past. I was once serving, and this was maybe 10 years back, one of the hard drive manufacturers, and you'd still find old IBM letterheads lying around from days past. And I think what I'm trying to say is, starting ab initio and creating some of these things is incredibly tough. Most of technology development happens in incremental ways, with the capabilities that have been built over a period of time that are guided towards new end markets, etc. And I think mobilizing that capability, adding to it, keeping it alive, it's an incredibly tough thing to do. And I think companies who are making these acquisitions are obviously recognizing that you're moving into situations where integrated solutions that bring together silicon along with photonics is very much one pathway forward. And the ability to sort of bring these technologies together and reliably at high yield, at high level of performance, being able to provide solutions is a very competitive differentiator. And time is of the essence. We cannot spend many years building these capabilities ab initio.
Yeah. Abhijit, geopolitical pressures and supply chain restructuring are reshaping where chips are designed, manufactured, and sold now. From a strategy perspective, what does that mean for how semiconductors should be thinking about their portfolios, their partnerships, and their geographic front?
Look, I think the answer differs a lot based on who you are and where you're located and who you're buying from and who you're selling to. But that aside, I will say that just as there is a whole philosophy around designing for cost or designing for manufacturability or designing to value, and you hear all the D2C, D2E, DFM terminologies, I think there's a DFR coming up. You have to design for resilience. And resilience in your context might mean, multi-sourcing. It might mean manufacturing in a particular preferred location, even if the costs were higher. It might mean having partnerships with certain entities that may have been mildly competitive in the past. It could be all of these things. But I think resilience as a prime objective to enable sustainable supply chains, but also security in terms of being able to scale at the kind of volumes that are required. I think that's becoming a prime aspect around decision making, and you're seeing that in the deals that are being made, or the kind of businesses that are being pursued, or the investments that are happening. I think it's coming at the forefront of almost all major portfolio moves.
From your side of things, Abhijit, and I want to kind of switch the discussion now on a personal level, is what's been the most difficult piece of advice you've ever had to give a client?
I think it was telling a CEO that one of the leaders on their team was not going to work out. Wow, ouch, for what they were trying to do. And I think what made it tough was this was somebody they had hired. And so, moving on that was in some ways indicting yourself for a misjudgment that you had made.
And that's not easy. That must be one of the most toughest part of your job at McKinsey, I think, because you may have to sometimes, you have to guide people or CEOs to to humble themselves based on how do you do that?
Look,
I mean, other than using the McKinsey brand is solid, right? But I mean, that's a lot of magic.
you make a wonderful document that makes people see the light.
That's the secret, right?
Facts are just part of the equation, right? This is this becomes personal. This becomes emotional. I think there are a few aspects to it, right? At the core of it is our values around giving reasoned and fact-based advice. I think you can't compromise on that. That gets caught out very easily. And I think the other aspect of it is helping people understand scenarios and alternatives. Well, what happens if this decision is not taken? It may be painful or it may be tough, but what is the projected outlook if you don't make this? And I think people feel it and understand and realize the opportunity costs of missed decisions or delayed decisions can be crippling, particularly in our industry. I think the other aspect of this is sometimes people have a nagging feeling about, organizations do, right? They've considered various alternatives. So maybe the answer you're coming up with is not necessarily something that is very new to them. It just gives them conviction, or it gives them courage that a neutral third party has put together a reasoned chain of thinking on why that particular action needs to be taken. And sometimes you need that validation, or you need that intensive review on something that you may have been considering. And I think it gives you courage and gives you conviction to follow through with it.
Fair. That's a very fair point. On positive notes, I mean, what are you? I mean, what is the most proudest moment in your career with regards to the research, your client work, or the broader contribution to the industry that you could share?
Look, it's client work. I mean, we're
Is there one that specifically stands out? That's like
we're client animals. I think a couple recently. I can remember. I think one is a materials company that decided that they needed to make a very major acquisition in the optical space. And this was pre-AI having come on the scene, right? It was an expensive deal. It was a challenging deal. It was a multi-party kind of sought-after deal. And I think you had to build enough conviction that the technology was something that was worth picking up, even if, there wasn't very short-term avenues where it could be deployed. But it was so differentiating, and the combination could have been so powerful.
Yeah.
It was worth pursuing. And that played out very well. I think that company now has 8x the market cap it did, when that deal was getting made. I think the other one is, it's a storied company. We worked with a 50-year-old semiconductor company, and they were going through their third sort of rewiring or change of operating model to sort of make them relevant for tomorrow's challenges and tomorrow's markets. And, luckily they decided to do this exercise again just before the AI boom kicked in. And that allowed them to really question themselves on where they were cutting edge or where they were adding value, and reorient a lot of their spending and investments towards growth areas in time to catch the boom. They're at their highest market cap ever. So that gives you, and the most important thing is, because these are long sustained programs where you had deep soul-searching conversations, you make a lot of friends along the way, which is the best part of it.
It's the highlight of the whole game. It's why we get up. Here's one question I must ask you. What is the misconception semiconductor executives have about what strategy consulting actually does? And to add on to that, what do the best engagements get right that the average ones miss?
Look, I think most people who don't understand what strategy consultants do think we are some sort of a research outfit that prepares reports. Or, we produce those pretty pages that, go into board meetings and McKinsey logos and the blue books, as they used to call them, and all. I think the reality, and particularly for the last many years, is, the firm as its mission talks about making distinctive, sustainable, long-lasting changes in performance. We're here not just to give you advice on what to do, but stay with you and help you do it. as we discussed, execution is the tougher part of the challenge. And I think increasingly, the firm is partnering clients in driving transformations, driving change. On the front end, helping them understand, visualize it, get conviction around it, build the case for it, set the right aspiration. But on the back end, then also focus on changing the organization or the operating model or the systems or the processes or building the capabilities that are needed towards some of these efforts.
Thank you for sharing that. Abhijit, you've been writing and advising our industry for a decade now, right? What's the secret in terms of staying curious and energized, especially when, every year something's different, it's changing? And, I think the key question I would love to hear a genuine answer or from your side is, what does intellectual renewal actually look like for you?
Look, I think we're at a fairly privileged position. I think most people, and I keep joking with folks that, every time you introduce yourself, people will talk about, I've done, 20 years in this company. I've done 25 years in this company. I always start with, I've completed 20 years in McKinsey, and now I feel I'm part of middle management. But I think the bigger point is many of our clients have spent lifetimes in a certain part of the industry looking at a certain kind of problems and certain value chains around them. They are incredibly deep. You will not find folks who understand that technology or that market or that product or that set of customers better than them. It is truly cutting edge. But I think what they don't, the muscle that they don't flex is perhaps seeing a broader view, seeing across corners, seeing across silos in the industry. And God, it's an extremely complicated industry. It does everything from, the equipment that is, like I said, sorcery and black magic in terms of, physics and material science, to chemistry and core of, software and AI and electronic design, down to assembly and test, advanced packaging, and now, heating, and so many different disciplines, so many different companies based in different cultures and geographies that are part of it. And I think, for me, I think just the sheer breadth of all of that, being asked to address some of the most important problems for those people, because they bring McKinsey in when they need somebody to look at their sort of biggest problems, but being able to summon the expertise from the experience you had in other areas and combine it with what they know. I think that sort of forces us to remain at the cutting edge, to tell them something new or to show them a way of looking at things they had not done. And that gives you an intellectual kick.
Yeah, fair. No, it's a fun gig. Definitely a fun gig. Abhijit, if you could point to one transformative shift coming into the semiconductor industry over the next decade, something that most executives are underweighting in their strategic planning right now, could you share what would that be?
Sure. Look, I mean, the biggest trend that's playing out right now is certainly the build out of AI. But I think what people are underestimating is what 5, 10, 15 years of a persistent annual innovation cycle is going to do to the industry. If you look at our estimates today, in the next 5 to 7 years, the AI industry is going to invest somewhere between 5 to 7 trillion with a T dollars in capex. That amount is probably twice the combined amount that was spent in today's money on the Manhattan Project, the Marshall's Plan for the rejuvenation of Europe, all the internet infrastructure that was built, the Belt and Road Initiative, all of these things put together. And this build out outstrips that by a factor of 2. It's not being done through governments and subsidies in macroeconomic ways that are tough to bear. It's being done and financed by business entities and economic entities who are looking for returns on these investments. Several of them have reasonably healthy balance sheets to be able to sustain them. So this money is not going away. The development cadence is now very much an annual development cadence. NVIDIA has set the tone here. And the last time you did that, the best example is the iPhone, which had maybe 10, 15 years of uninterrupted year-on-year development. During that time frame, the iPhone processor probably grew 10 million times in terms of performance, 10,000 times in terms of bandwidth. The application ecosystem that was built was many thousands of times in terms of revenue. The supply chains that got built allow you to, have first weekend sales of 150 times the device, 50 times the lifetime sales of the device. Coming out on the other end of 10 years of, repeat annual innovation does something very transformational. And we are just at the beginning of that journey. We've had maybe 2 or 3 years of that. There's perhaps another 10 years to go. And so what does that mean coming out on the other side of this? I don't know. It means probably racks that, can store and do a semantic search on the entire US Library of Congress. They can probably store, every single piece of video that's ever been made up till now and in sort of close in memory. It probably means something that has enough bandwidth to afford instantaneous brain-to-brain communication between two people any place in the world. We're talking about technology unlocks and capability unlocks that are quite unlike what we understand it now. And I think making sure that you are becoming part of that drivetrain and enabling that whichever way you can,
Yes.
I think that is the most important thing that most executives need to get their heads around.
Missing out. Abhijit, it's been an absolute joy to have you on the Semiconductor Leadership Podcast. Last question, and it's of course a big one, is me and you have still got some gray hairs more to grow. Moving on in the future, what's the goal? What's the end goal?
Look, like you said, I think I'm hopefully halfway there. There's a lot.
We are doing there. We still got a lot of work to do in the next 20 years or so.
So I had a client I respect very deeply. We're friends, and he always talks about how this industry is fundamentally built by standing on the shoulders of giants. We're just sort of pushing the envelope a little beyond those who came before us.
Sure.
I also, there's another motive I'd like to, at the firm, as we review our people, one of the things we often ask each other is, how many folks or how many people did you change the odds for? How many people are on a different trajectory than they would have been if you had not been part of their professional life? And as somebody who sort of, became part of this industry at a time when it was not sexy, cool, as it is today, and, took a decision to sort of participate early and stuck with it, I think I'd be happy if there are a bunch of, colleagues and leaders and institutions for whom I'm able to change the odds and, inspire them to make decisions early and stick with them.
Yeah, well, that's a very well said. Very, very well said, Abhijit. I could have not said it better, but we really are standing on the shoulders big time for those who have worked in the past and even the work that they're doing today, right? But I think, one of the most common constant, which is why it keeps our game much fun, is the change. But the people still remain the same. It's the same people. It's the same crew for generations and generations.
I think it's changing.
There's a new fresh, I know there's a new fresh community that I'm seeing of leaders coming into play.
Yes, the number of calls I get from, colleagues, and we can see several people, leave early in their career to try and do other things. The firm prides itself on that and creating future leaders in other industries. And the number of people who now call me and say, I'm going to leave and work for so-and-so semiconductor company. And, I'd like to interview here. Can you tell me about that? Is increasing. And that is refreshing because for a long time, at least in the past decade or so, that was not the case.
No, it wasn't as attractive. Abhijit, it was an absolute pleasure having you on here. Thank you for the guidance and information. And I'd love to have you on the next episode and delve more on the trends of the market. This is a good taster for everyone to get to know you.
I really appreciate the opportunity. I know you've had a fantastic week with the 3 back-to-backs, exactly summits and sessions, and you're going strong on caffeine and conversations.
That's the secret. Like you said, we do it for the fun of the game and the people we get to have the fortune to talk to. So thank you, Abhijit, for joining us. Ladies and gentlemen, thank you for joining us on the Semiconductor Leadership Podcast. If you want to reach out to Abhijit, you can reach out to him on his LinkedIn profile right here. It should pop up just below. And if you're interested on the semiconductor activities that McKinsey's working on, you can connect to that link just above me, right on top of my head here. As I say, if you enjoyed the episode, hit that like button, share it with people that you would see that would find it of sincere value. And also, if you're brave enough, send a comment through. It takes a village to raise a chick. It takes a village to raise a podcast. So don't forget to hit that subscribe button. But in the meantime, thank you for joining us. And I look forward to seeing you at the next episode. Take care and bye for now.